Yo, what's going on? I just want to get on here real quick and show you guys the exact trade that I took and the trade that I didn't see in hindsight, but it's a really good case study because it's literally the move that bottom ticked the exact low and sent us to the all-time highs. Like literally, I can't make that up. And it was all utilizing Kaz's Wick theory. So it goes to show that even it's always good to journal, see missed opportunities. It's not a loss because I did capitalize on the second leg of this redistribution, and these models are on the Discord. So if you guys are not liking and subscribing, I'd recommend that you do. And yeah, so this was just utilizing Kaz's Wick theory and then standard deviations. First one is a case study. It's how you could have bottom ticked the exact move that sent us to all-time highs. And then the second trade is the one that I did take. It was just the second leg of redistribution, and it was the move that actually sent us to all-time highs. But bro, look at that view. Just beautiful, just absolutely stunning. But yeah, let's get right into it. Okay, so for the case study that allowed me to catch the second leg, because I originally missed this move, but I saw this reaccumulation. I was like, bro, we're just going to keep going higher. So utilizing this case study is how I caught the second leg of redistribution. Um, it was all based on a daily fair value gap. So basically, let me get rid of these drawings. So right here, what do we have? Right, we have a daily busy, just a daily bullish fair value gap, right? So we tap into it once and then again twice, right? And then do you guys see this key level right here? If you guys want to learn how to put these key levels, you guys are going to join up the Discord. That's all I'm going to say. But this key level right here turned this fair value gap into not only just a fair value gap, but a measuring fair value gap. So this increases the probability of this holding a lot, right? So then we go down to our intercorrelated time frames, and then eventually we hit what? We hit the M20, right? Because it's all intercorrelation. If you guys don't know what your intercorrelated time frames are, you guys are significantly like reducing your edge or like your win rate. But Kez's Wick theory, right here, very simple. What do we hit? What do we soup? Right? What do we soup to the T? To the T, like bro, look at this. This would have been your entry, Wednesday 9 a.m. And again, entry would have been right here. How does Kez's Wick theory work? Stops below the wick. And you guys can see, like, I didn't see this in hindsight because personally I was waiting for this level to get hit and then form Kez's Wick theory. I completely missed or didn't see this fair value gap. But then after I saw the fair value gap, I was like, oh, okay, so we're still just going to continue going higher. And then let's get into some standard deviation sauce real quick, right? So standard deviations, you just want to pull your manipulation leg. What is your manipulation leg? So there's two types of programs that we're in. We're either in a buy program or a sell program. In a buy program, we're making higher highs and then lower highs. And then in the sell program, we're making lower lows and then lower highs, right? So we're clearly in the buy program. And in a buy program, we just want to standard deviate the most recent manipulation leg. So that's why identifying what type of program you're in, because in a buy program, every single leg that's opposing is a manipulation leg, and then vice versa for your sell program, right? So you just pull your standard deviation from your manipulation leg right here, the highest high, lowest low, and then what do we have right here? So the 2 to 2.5 are the settings for it. It's 0, and then the 1 is super duper useful. This is your quote unquote support / resistance. And then your 2 to 2.5 is also really good too. Because the second that we hit the 2 to 2.5, what happens? We can either reverse off of the 2 to 2.5 or we start to reaccumulate. In this circumstance, what are we doing? We reaccumulate. I see that we're reaccumulating, and then I look for what? I look for my edge again. And this one was actually taken. And it was just this Kez's Wick theory right here. It was based on the M15 time frame. Again, if you guys haven't seen the Kez's Wick theory videos, I'd recommend watching all of them. All of them are super duper insightful. They will completely change the way that you trade. And again, standard deviation. So clear buy program, reaccumulation. We're going to take what? The reaccumulation high to the reaccumulation low, right? Which is right. Okay, so what is this tool? Nice. It's right here. Standard deviate that. What is our one doing, right? Do you see what the one is doing? It's clear support, failing to close below it. And this was an intraday trade. I was just targeting the 3. Typically price will hit 4 and then reverse, but me personally, I just target either the 2.5 to 3, just because it increased my win rate a lot rather than holding. Like typically I'll hold a runner to the 4, but yeah, you guys can see, as you guys can see, the 1 is just support to the 2.5, straight through it, almost at the 4, failed at the 4 by a little bit, but this was the trade that I actually took. And utilizing this case study in hindsight, because I missed this trade, I was able to capitalize off of it and enter here. But yeah, it's a free sauce, free game, standard deviations. Again, remember, buy programs, sell programs. Any questions, join up the Discord. But yeah, that's it for Kaz today, and peace.